Hey guys, let's jump right in. What you're about to see are 3 game-changing products we're about to launch to kickstart our business. First, we have the Historical Exploratory Analysis Test, or the HEAT. What this tool does is simple, but powerful. You plug in the asset you want to analyze, and it dissects that asset's history, breaking down every major crash and cycle. From there, you can go back and analyze each crash as if you were there when it happened. You see the peak, the trough, the crash itself, the lead up, and the aftermath. And not just that, you see how every other asset performed during that same period. Sectors, industries, bonds, currencies, commodities, economic conditions. You get a front row seat to what actually outperformed and what didn't. Where would you have wanted your money during this crash? What about the recovery? As we can see, the Nasdaq outperformed the major US indices. Let's dig deeper. Technology outperformed all sectors. Zoom in further, semiconductors and hardware returned over 200% each. In just a few clicks, we've identified sectors, industries, and even individual stocks that outperformed. In later versions, you'll be able to run a backtest from here to see if that outperformance was consistent, and then optimize it using our AI prediction tools. More on that later, but make sure to check out our Predicting Market Crashes video. Now let's take it further. Say you believe India will outpace the US in growth over the next 5 years. Instead of analyzing US markets, you switch to India with one click. Now you're analyzing the Nifty 50, 30 plus years of data, Indian sectors, industries, bonds, and economic conditions, studying every crash, every recovery, and identifying what actually worked, then layering AI on top to optimize it even further. Once launched, you'll be able to customize every aspect of this test, from the events displayed during each cycle to the specific assets and cycles you want to include. And if we don't have the asset you're looking to analyze, you'll be able to upload your own data and run the test seamlessly. You've seen what this tool looks like with the S&P 500. Now imagine running this same test using the Fed funds rate, analyzing the effects of the Fed's tightening and easing cycles on global assets, or oil. Next, we have the Fund Analysis Test, or the FAT. This is probably one of the most powerful and easy to use tools for anyone managing money. At its core, the FAT shows you how your fund, or any asset or ETF, has performed relative to its benchmark across different market environments. Then, it suggests which assets within your mandate you should be overweight or underweight in during those environments, so you can improve returns and consistently exceed your benchmark. Let's walk through an example so you can see just how actionable this really is. Let's say this major bank's US equity fund is yours. You simply upload your fund's performance data, the longer the better, or select from the thousands of assets and funds we provide. Next, you select or upload your benchmark. Then, you define your fund's mandate. These are the environments we'll be analyzing. Similarly to how we analyze the S&P 500 in the HEAT, we analyze, calculate, and isolate all of the cycles and phases for the assets in our environmental assets category. We go all the way back to the beginning of the data, breaking down each asset into its peaks, troughs, crashes, and expansions, and then analyze how your fund performed relative to its benchmark during each of those recurring environments. For example, let's say when gold was in its trough to peak or expansion phase, your fund historically underperformed its benchmark by an average of 7.5%. But when the US dollar was in its peak to trough or crash phase, your fund outperformed by an average of 3.1%. Now let's run the test to see how your fund actually performs. On the left-hand side, you have all of the environmental assets, including your benchmark, that we're analyzing. On the right, you see all of the cycle phases and how your fund performed relative to your benchmark on average during each phase, historically. As you can see here, your fund outperforms the S&P 500 when the unemployment rate is in its trough to peak phase, and underperforms when the US dollar is in its peak to trough phase. Now let's take it one step further. Let's look at what these relative performances have amounted to over time. Your fund has underperformed by a cumulative 434%. When CPI was in its trough to peak phase over the last 20 years. That's a significant amount of growth being left on the table, especially when you factor in compounding. As eye-opening as that is, we can go even deeper. When you click on any of these returns, you'll see a full list of the assets within your mandate that historically outperformed during that exact environment. In other words, the assets you would have wanted to be overweight in, and the ones you should have avoided. all right at your fingertips. The optimal portfolio positioning for the current environment in just a few simple clicks. Lastly, we're launching 2 weekly newsletters. The first is for professionals in financial markets. You're busy, you're overloaded with information. You don't need more noise, you need clarity. In under 45 seconds, you'll know what's projected to outperform based on the current environment, what's happened in markets last week, what's happening today, and what's expected in this upcoming week. The second is our AI and innovation stock of the week. For those looking to invest in the next NVIDIA before it goes meteoric, we break down the companies we believe will dominate the future of innovation over the next 5, 10, even 20 plus years. This is just the tip of the iceberg. We have a lot more coming. If you're looking to get involved, reach out. We're looking for mentors, team members, and funding partners. Thanks for watching, and stay tuned for our founder story video coming next.